Stay right here to watch the rest of this video, or click over here to get hold of a free trial of BetAngel, or click over here and subscribe to get instant access to new videos as they're released. Thank you for watching the video.
This was a trade that I did recently, and I thought it would make for a really interesting video because it shows you how I think and what my best type of trade is. So I've just clicked on the graph there. You can see that the price on this favourite has come rocketing in for over a long period of time. And typically what happens is people tend to follow trends. And as they say, the trend is your friend until the end. And when you look at sports markets, it's very different from financial markets, because if you see a trend like this, you can see that there's been a lot of activity, but you can also see that it's sort of temporarily stopped. But typically, a lot of people will continue to follow the trend, whereas my instinct is to always go against the trend, especially in sports markets. Sports markets have this habit of sort of meandering, really. And the reason for that is it's impossible. You can see I've just entered the trade there at 202, 204. It's impossible for the price to come in forever. So, you know, it would be amazing, and I've just put the closing trades in anticipation that the price will go up there somewhere. It's impossible for the market to continue on inwards. So, you know, if we saw this backed into 101, this favourite in this race, it would be absolutely remarkable if that occurred. Rather bizarrely, things like that have occurred, but for reasons that are beyond the scope of explaining in this video. But typically it would be utterly remarkable. So there becomes a point at which people will refuse to back it. So you can see in this market, the point at which people are refusing to back it anymore is when it reaches evens, when it reaches that point in the market around twos. So our judgment here is that the price has been backed in, it's been backed in and in and in and in and in, and that at some point people are just going to get fed up of that and they will stop backing it. And you can see that that is more or less what's occurring at this particular moment in time. We've seen the price come down to 198 at the lowest. There's lots of money matched at or around evens at 2. And therefore we're just sort of saying, well, you know, the money's going to run out, people will stop backing it, and we can probably profit from going against that. And that is my favourite type of trade. So if the price was drifting remarkably, then typically I would tend to go in the other direction on that as well. So I tend not to be a trend follower. There's a really interesting bit of information I'll give you around this at some point, which will show you that accidentally people have misinterpreted some of the terminology and the way that this sort of trade is achieved, or what you would call it. But essentially what I'm doing here is the price has come in, I'm going against it. If the price is going out, I would start to go for it. I'd begin to look at it. But once the trend is underway, probably a big chunk of the move has happened already. So my favourite trade is actually going against it, because I know that loads of newbie traders, punters, mothers, sons, dogs, and everybody will be on it on the basis that they're going to miss out. And in fact it's a rotten psychological flaw that in fact when you see a trend you tend to extrapolate it. Everybody does it. It's a common human issue, a trait that people have, and it's something that tends to lead people into the wrong situations, whereas I tend to sit on the other side of the market. I'm more interested in making a call when a trend is about to finish. If the trend is underway, then my instinct is more to think along the lines of, well, you know what, it was a good trend, but I've missed it and I've blown that. Whereas if we're looking at a trend, then I'm sort of thinking, well, when are people going to stop backing this? Because I know that it's not going to go into 101, I know it's not going to drift to 1,000, and therefore it's pretty obvious to me that at some point that activity will just sort of exhaust itself. People will stop backing, stop laying, and the market will sort of regress to mean at some point. And that typically is my favourite type of trade, because my strike rate on that is very high, and it goes against the prevailing psychology, which I also like. And people have this tendency to endlessly extrapolate trends, when in fact, you know, what you're seeing in the market is not an extension of that trend, and therefore, you know, you feel that you should be going against that. And it's very difficult to go against that, but typically that is what produces absolutely the best quality trades for me. Tends to be very high strike rate, and I tend to be able to spot them quite easily. And the big advantage that I have is everybody's looking at the trend that's prevailing in the market and following it almost blindly. And therefore, if I take a position that goes against that, then when the position does start to turn, there's a little bit of a panic, the price rushes up, and then hey presto, I get the ability to get a decent trade out of it. As you can see on the video now, we've exited at or around the point at which we feel it's probably gone far enough in the other direction, and you can see that in fact we were absolutely spot on here as well, and that the price has stalled at this particular moment in time. And you'll often find this. The market doesn't find the exact point at which it should be at instantaneously. It tends to wobble around that particular point, and by going against the trend you can pick off some pretty decent trades, which is exactly what we've done here.
If you're interested in learning more about BetAngel, its tools and the opportunities they present, then why not visit betangel.com today and download a free trial.